welcome to LCG's Week Ahead. Well, this week has been an interesting one just gone by. We've had non-farm payrolls from the US beating the headline number, but the unemployment rate has actually risen to 5% from 4.9. So really all eyes on Janet Yellen when she speaks sometime in maybe Wednesday of next week as to where we go from here. And certainly the markets are not pricing in anything in terms of a rate hike from the Federal Reserve until at least November of this year. So as it stands, we're seeing a certain amount of I suppose a bit of strength in the US dollar, certainly against the euro, but ultimately it is a little bit of weaknesses in equities that we are seeing, having seen a 2016 high for the likes of the Dow Jones just in this week gone by. It remains to be seen whether any of these rallies can be sustained, and certainly the downside looks more likely than the upside at this moment in time. So the real things to look for next week, certainly I think the UK services PMI on the Tuesday is the one to watch. Manufacturing data come in a little bit softer than expected, and the outlook there doesn't look too rosy for the UK. So we will rely on the services PMI to get us through this tough patch. It's expected to come in at 52.7. down from 53.8 at the last juncture. So my trade there is going to be obviously around the cable. As it stands, we're below the 143 metric against the US dollar, and that does ultimately spell a return perhaps towards the 140. And as we approach the referendum date in June 23rd, we could well see additional sterling weakness. There are other ways to take advantage of this. You can obviously take advantage of the correlation with the euro dollar and cable, and as it stands, it's oscillating the 114 level, but while below the 114.75, there is still a propensity for this to be something of a false breakout for the euro. And with that in mind, we'll also have Mario Draghi speaking at the press conference next Thursday. Now, despite all the actions from the ECB and the dovish jawboning, we are still seeing latent strength in the euro, both against the pound and against the US dollar. So despite the diverging monetary policies, we should expect to see something quite dramatic from Draghi if he wants to see the euro start to lose this steam and ultimately start to drive inflation. We're seeing oil prices an awful lot lower at the moment, so we're looking for oil inventories on Wednesday as well. The political ramifications of the lack of freezing of production from Iraq is obviously impacting now, and that will more than likely lead equity markets, as it has done over the last number of months, to the downside. So as oil goes, there goes the equities. And the best performing sector in Q1 was that of the UK mining sector. That is starting to ease back as well, with the underlying, the likes of copper, all trading below their 200-day moving average. Obviously oil having an impact there as well, but certainly it is a big dollar driver for the time being. Later on in the week, we will see manufacturing production from the UK and also the Japan current account balance. As it stands, dollar yen very much stuck in a range at the moment between the 111.85 and the 112.75 levels. So ultimately, we need to see a break to the top side or to the bottom side to decide the direction there. I would imagine that we'll see decent support in or around the 111 level if we do actually break down further from current levels. So that's my trade there for that one. We're expecting the current account balance from Japan on Friday, as I said. We also have to look for the German trade balance as well. It's expected to show an even bigger surplus of around 18 billion. So again, political ramifications abound, but certainly the euro might have some latent strength at the moment, but that could very well be short-lived. Thank you for watching.